Hello, everyone. Welcome back to the RationalInvestor.com's weekend offering, our weekend frivolity that we have with the public. And I noticed there's quite a few people watching this video, so I sure hope people are getting value out of the offering here. We do have, of course, in the lounge here, and I think I'm presenting to everybody so you don't see them, but we have a sort of a regular sort of crew. I don't know how I do that. Oh, if I go like that, you probably see them now. I don't know whether that works or not. But anyway, so they're in the lounge. They're asking questions away. I don't know whether you saw them or not, but and we do have the YouTube chat open there. I see Jacques is saying Huey? I don't know how to pronounce that. But anyway, I think I know who that is. Nice to see you, sir. And your 13 friends. I think I try to keep these weekend offerings kind of lighthearted, and it's supposed to be a little bit more sort of interactive with the community. So there was, we actually had, hey, Chaba, nice to see you, Slick. Chaba. We just had the level ones actually finish their week of review of the program. And I put in their lounge Grim. Oh, Grim, this guy, man, he's a superstar. He's probably a better instructor than I am, man. Man, so good. He was just sort of walking through their charts, and of course, they're posting tons of charts and trade ideas and stuff. And he's doing a great job, and of course, class, we only have so much time, so class came to an end. And I just simply said that if you had any ideas you wanted me to look at for the level oneers, and we actually do the broiler chicken show after their class is over, so they can just simply hop right in here. But feel free to post those requests in the show request room, and actually we have that on the Rocket chat. So I see Colin asked for me to take a look at something B&B. So we'll take a look at that. In fact, here, why don't we'll pick this idea apart. It doesn't look like a bad idea. It looks like you're heading in a good direction. So if there are any level oneers that you, as I sort of posted in the class, that you didn't get a chance to have somebody take a look at an idea that you had and sort of give you 2 cents, feel free to post it in here, and be more than happy to look at it. So I was really proud of the level oneers finishing off there today. Did a great job. Really proud of Graham. Couldn't have a better spokesperson. Like I said, probably a better instructor than I am, dude. Way to go. And his sidekick this term, Alex Bajan. Oh, I think I'm pronouncing your last name correctly. I don't know whether I'm allowed to say that. I might. Whoops, sorry if I'm not. Anyway, Alex, just an awesome TA, just an absolutely awesome TA. And again, beautiful people. These people are so good. I love just being around them. The Wookiee's got such awesome karma, eh? What do you think? Do you think he has pretty good karma? Just great karma. And Alex, you just feel good being around these people. I gotta tell you, man. And Alex actually was a host when I was in touring Germany this past summer, and just felt you feel good around these people. I must be a little bit of an angel in you, dude. Seriously. Anyway, so they had a really great class. That went really well. And we've actually got a whole bunch of social events coming up here in TRI's calendar over the next couple of weeks. A little bit short notice for me because I'm like an old turtle. So I move slowly. But a couple of the local boys said, hey, why don't we head down to LA and get together for the LA meetup? Because there's Alex, our another Alex, Vienna Alex, who also, of course, is another angel. And who drives the bus, the mayor of Vienna. He drives the bus for our daily broadcasts. He's going to be in LA. So, if nothing else, you get the opportunity to meet him. He's such a great guy. But a couple of the local guys here said, why don't we go down to LA and hang with them when they're there. And so we're going to do a big LA meetup in I think the next week or so. Like I said, a couple of the local guys with me. We booked our tickets yesterday, so there's no going back now. But I put out this funny little tweet, and anybody watching on the public, and especially I want to get Jason. I don't know where you are, Carol. You're in class. I see you in class, so that's good. So bug your brother and tell him I'm going to be in LA, and Sean, right, and that whole crew. I want you guys to come out. So the point is that we've got this big LA meetup coming up here this coming week. If you are in the LA area and you'd like to come out and meet, we've got probably a dozen or so people that are already planned to be at the meetup. And if you want to come and just sort of get to know the people at TRI and what we do, and you're in the LA area, feel free to reach out. You can just simply respond to this tweet. Yeah, where the hell is Mr. Mo? That's that. And I know you. Well, I don't know whether you are. Maybe you are. You aren't. But Mo, if you are watching this, dude, get your butt out here. I totally want. He was the one who did up these graphics, right? I mean, I totally want to see you. So. Anyway, so the point of the matter is we're coming down to LA, and we've got a mini little Vancouver crew that we're bringing with us, where it's going to be a little entourage. So we're going to have lots of fun over the coming week. And also, too, if you're in Europe, and does anybody Jamie's not here, right? Does anybody see Jamie here? Do we have anybody that's going to the UK meetup and that has sort of a social tweet? Jamie actually responded to me in a tweet this morning. Jamie's sort of our quarterback of the UK group. John, are you going to go out to that UK meetup? If you got a link or something that you guys are throwing around that I can just show the public, just so, yeah, that sucks. I heard saying that you weren't, but Sjord, our bread representative, is going to be there, and Julian's going to be there too. So somebody give me something I can post on the video for the YouTubers to see information. And is Thomas going to be there too? Holy crap! So you get like, I think Grim's going to be there. Alex, you're going to be there, right? Anyway. So we've actually got two big social events coming up here. It's incredible. Jacques, I think you want to be there, right? I think he said he was going to go. So anyway, the point of the matter here is I showed you the LA meetup tweet that I put out. If you are going to be in the LA area and you want to participate, just DM me or PM me or respond to this tweet, whatever it is you're supposed to do. We'll get you in that loop and tell you, where and whens and all that kind of stuff. And somebody, before I finish my rant here today, anybody that's got got a link or that's the LA meetup one, but I don't want to give that out, Joshua, to the public. We have sort of a document going around the site, and Joshua just posted it in the lounge. Mm-hmm. But if there's somebody that's got some sort of tweet or something about the UK meetup, before I'm done my rant here today, we'll just show it to the YouTube audience, and anybody who's in the UK wants to come up for that, they'll have that link. Okay, so I've said my sort of piece. Two big social events. We were actually going to plan on doing a Coinigy show. But I think that's probably going to have to. I'm going to be traveling next Wednesday, so I don't know how I'm going to be able to do that. But keep your eyes open for that. It would be really nice to hook back up with Will and Rob and see how they're doing over at Coinigy. And we actually, as a special treat, I don't know whether you follow. Okay, so one of our lounge members, I told you we have sort of like a crew that's in the hangout here with me when I do these videos. He's given me this link. It's I guess this is where the meetup's going to be. So can I post this on the YouTube page? Am I allowed to do that? I don't know. This isn't some bad. I'm not shilling don't get mad at me, YouTube, for posting that. But there's the link, and John says it's going to be 1,900 hours on Saturday, December 15th. Oh, cool. So that's actually the week that I get back from LA. I come back on the 12th. So there's the UK meetup place. So book your Christmas party. All right. Okay, so thank you, John. Appreciate that. And if anybody has any tweets or anything to that effect that they can just follow or link into, I'll post that as well. So thank you very much, John. I appreciate that. Okay, so everybody's probably sitting there going, okay, enough TRI shilling stuff. Brian, just get on with the charts. I thought it would be kind of fun. And actually, I was looking back, and that's why I had to load that second sort of tweet feed. But I was looking back to try and figure out where I sort of left off with the public. Well, I guess, yeah, so that's that. And that was this. And because keep in mind, I only talk to you guys in the public like once a week. So, and everything changes on a weekly basis. So I had to sort of go back and, okay, when did I last sort of talk to these guys and what was sort of going on? And of course, we had that big dump. Oh, man, what a mess. A lot has sort of happened in the interim. Still got to say, looking back in hindsight, if you can just think about these kind of big weekly levels, I think it helps a lot to frame sort of expectations. So, we talked lots in the weeks gone by about, stamp weekly gaps. You just don't see that every day. Down into things like institutional fingerprints. So level oneers, they just learn that kind of stuff. Where did the institutions stop bears and bulls and that kind of stuff. So, I think this is a pretty important higher time frame level, and it's fascinating to watch how market sort of explores that level and decides that, okay, this is a workable base, and let's start, building a range. Like seriously, if you want to teach yourself technical analysis, you want to teach yourself trading, just grab this screenshot, take a screenshot. I'll even just take the link here for you. And put this into your journal. And, the cool part about it, the site wants to try and make these weekly offerings for you guys so that we can interact with the public and you can sort of get the feel of how TRI works. And then, seriously consider whether you want to, have sort of firsthand education on how to build these tools and interpret them and just, help you actually take that next step to actually using these tools in your trading and, building out trading plans and trying to figure out what type of risk taker you are, yada, yada, yada. But at the, please, consider joining our site and our school. But, at the very least with these weekly educational pieces, I really do like to try and give you information that you can use and learn. And this has got to be a fantastic model for you to just throw in your journal, right? And I just put the link in there in the YouTube page as to what do sort of bottoms look like. And how do we sort of figure out where sort of realistic levels, weekly gaps, help that bottoming process. And what I found fascinating about this trade was there's just so much anecdotal evidence that set up the idea that this thing was trying to bottom. And this is before the fact, right? You can look back now and go, oh, yeah, well, geez whiz, the market rallied away from those lows. But this is like a real-time image. And this is the kind of stuff that you have to be able to see in real time. Right? So, really good learning piece there for you. So what else were we looking at last week? I think it's not a bad idea also too to remember sort of higher time frame expectations. And we remember back to this conversation a week or two how, when we hit these AB equals CD objectives, and also that was always a weekly gap on stamp and all that kind of talk. I mean, talk about a trade location. And, you know, like I like to teach the site people, like location is always the most important thing to sort of start your sort of, should I decide to risk my hard-earned money? Location is always got to be where you have to start. So long and short of it here, as we were coming into these levels and trying to turn, at the very least, if you are a bear, just cool it, right? Wait for the next setup to come along. If you are a bull, right, higher time frame trade levels, RLZs and RLZs, Ws, yada, yada, yada. There are long setups that developed. Let's see. Now this I found really fascinating because we even had, when we did the video, we even had somebody ask about, what the hell is he talking about when he says chai boys? And you'll notice this is the Bitcoin futures continuous contract on the CME. So if I make reference to chai boys or something like that, I'm talking about the futures traders out of Chicago. And of course, they don't work on the weekends. So I found it fascinating. We were talking about this, and we even drew up this sort of purple wedge of where we thought price ought to come back into to give the Chicago boys the opportunity to put on shorts at the appropriate market structure fail levels. And what's really cool, and this was sort of a tweet halfway through the week, there is that, oh my God, awesome trade location. Oh, what about them? And sure enough, woohoo, big rally. And what's so cool is when we look at this chart right now, you're going to see how the market just basically topped out right through this window. It's shocking. Anyway, it's really cool. Let's see, what else were we talking about? Did find that as we were sort of working our way through the week, the bullish sentiment started to get quite palatable. And that, of course, is a danger sign. I think, coming out of this bottom, RLZs and RLZs, double bottoms, divergences in momentum, Willie stupid, yada, 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 heading up into this area, dangerous place to be a buyer. And sure enough, we've just sort of waffled around the top of this range. But, interestingly enough, too, you can kind of see this big node in the profile. If you see this, and this is great learning material, so let's take a shot of this chart as well. If you do subscribe to volume profile is very esoteric. A lot of the Chicago floor guys, they just live by this stuff. I don't know, is there even a CME floor anymore? I think they got rid of it, but back when there was a floor, you go around looking at everybody's terminals, and all I had was profiles on their screens. But I used to like to call this the claw, right? Where you have one big node up here, another big node here, and this sort of an empty valley in between. And, the whole point of this open market is what they call a price discovery process. That's the whole point of the market, is it needs to discover where ultimately fair value is and what the market's eyes are. And this is what we'd call a double distribution. In essence, there's two nodes here. But ideally, this profile really wants to look like a big parabola, right? Just a big sort of half circle. So clearly, there's a bit of unfinished business to be done up here. But, does that necessarily mean you want to be going and hunting longs up here? Man, that's a bit dangerous. And I think, as we'll see, price did ultimately stall up in sort of this reload zone area, and we've been waffling around. You could argue just simply filling in the profile. Let's see what else we were talking about. I don't know whether this is the stock market. Yeah, it is. I mean, you guys have heard me rant about AB equals CDs on Bitcoin to no end, but this stuff also works in the stock market, and I found this fascinating. If you ever see the market actually gap violently open lower, and everybody's just like, oh, that's it, man. Capitalism's over. It's toast. It's it. And it happens to be right into a harmonic level. And it just so happens to be into a gap that fills the gap. And also, institutional fingerprints, where did they put the bottom in the market before? Oh, my goodness. I mean, and what was fascinating about this is basically exactly where I sold my last short proxy on the stock market. But what was fascinating is when I did it, I actually got some feedback like, you're crazy. So in a weird sort of way, that actually was validation. And sure enough, the stock markets moved substantially higher away from there. We don't really talk too much stock market here, but this was a really interesting example of those bearish harmonics. So if you ever see me talk about AB equals CDs, and you happen to get two AB equals CDs, the yellows and here the teals, that give you a level, oh boy, pay real close attention to that level. I'm concerned that the U.S. Federal Reserve Board is really in a position where they don't have a lot of choice with regard to short-term interest rates, even though they are, of course, they're subject to incredible political pressure. Not going to touch that football. But I would make the argument, and this is an old measure back when they used to have the T-bill contracts that would basically be U.S. Treasury short-term paper, which the market used as sort of, the short-term interest rate proxy. I don't know. Maybe there was a actual formal policy change. I don't know, but we've transitioned over the past 10, 20 years into using these Fed fund futures as sort of the proxy for short-term interest rates. And I think it's because, part of the financial asset crisis, people had to literally go to the Fed for the short-term borrowing needs. And I use this sort of the spread between the corporate interest rate market, i.e. the euro dollars. Can't really see at the bottom of this. There you can see ED down here. And as you can see, everybody who follows M's and W's, there's no W's anywhere in sight here. And you could argue there's a nice sort of M structure here and lower highs and lower lows. The trend in corporate interest rates is up, and that's set by the market. The Fed doesn't have any control over that at all. And what you should see is that the Fed actually acts as a lagging, sort of trailing, like, oh, gee whiz, if I absolutely have to raise rates, okay, I'll raise rates. Because if they don't, then the spread between these two yields gets problematic. And you could argue, people that watch our site videos and stuff, and I've shown this image before, back in 2008, this spread went absolutely insane. And I remember specifically watching Wall Street Week with Louis Rukeyser and John Snow, I think he was. He was at that point, he was the chairman of Chrysler. And he was he was the chairman of a company that bought Chrysler. I can't remember the name of them, but anyway, and all the guys on the panel with Lou, of course, they basically run Wall Street. And he was like literally looking around the panel going, please turn the credits back on, turn the spigots back on, somebody lend money. Because the euro dollar market, which is the corporate interest rate market, was collapsing, right? Nobody was willing to lend money. And of course, the Fed had no choice at that point. The spread between these two just went through the roof. And the simple rule is if you see the spread above 1.0 or one full, I think it's 100 basis points. But anyway, the point is that 1.0 level is sort of the historical mark. And what I'm worried about, we're not there right now, but what I'm worried about is if under intense political pressure, the Fed backs off, but the corporate interest rate market just continues to print higher and higher and higher short-term interest rates, well, then we're sowing the seeds for the financial asset crisis. So really what we should be asking for the public and stuff is not the Fed, but we should be asking, why is the corporate interest rate market interest rate going up? And of course, there's lots of talk. I've seen just tons of talk recently across Twitter from various different guys that I like to follow about how corporate debt is the levels are staggering right now in historical proportions. So, I don't know whether it's the yield curve inverting, which of course historically has been a fantastic barometer of recession, or whether it's a credit crisis because short-term corporate interest rates are going up. The Fed's trying to keep interest rates low, bowing to political pressure, and the whole credit system seizes up like 2007, 2008. But there's no doubt about it. The next sort of quote unquote financial asset crisis is coming. You can see it. It's pretty obvious. And really the irony of it all is that, the market, i.e. Eurodollar market, is driving the bus here. The Fed is reacting. They're not ahead of the curve here. So I don't think, if anything, I think, as the public, we should maybe go easy on the Fed. And of course, the politicians, they love to beat up on the Fed because they're just a nice, easy target. But I don't think the Fed really has any choice in whether they have to raise or not. It's entirely up to the market and the Eurodollar. So if you want to follow this, my advice is follow the Eurodollar market for sort of lead and direction in interest rates, not the Fed. Really cool trade idea that one of our site members came on that we talked through the week. And actually, this is interesting because this is a play. Thank you, Joshua. Appreciate that. This is a play on China trade. And of course, the whole G20 coming up here. And, the Midwest farmers are dying 1,000 deaths. And of course, some political figures, this is sort of their breadbasket. They need to keep these voters. And I thought it was really interesting. I don't have the tweet and stuff. I'll have it, for the daily brief tomorrow. But there was some really interesting points inside sort of bulletins coming out of this G20 meeting that the Chinese were going to buy more U.S. agricultural products. So put it all together, and it was really interesting because we were following the trade very closely on the site with site members, but I didn't get my fills, which kind of pissed me off, but that's the way it goes. Traders got to trade. But we were very interested in taking long trades heading into that G20 meeting. And you can see the market's caught a bid here. It'll be really interesting to see Monday morning whether this thing has any violent action to the upside. I think, I've missed the trade. I tried to, Brian's a cheap ass, so I tried to lowball my way in here, but they just ran away from me heading into that meeting. But it'll be really, like looking at the longer term, like I showed you off of that tweet, and I've sort of been kind of intonating this for the past while. I am very interested in taking long ideas in the grain markets here, probably over the next year or so. This happens to be the wheat ETF, but, this is a classic buying when they're crying. And of course, when people are all rammering about wheat and corn and beans again, you can see the gaps up in here, right? You can see the gaps. It's kind of tough on this image, but juicy gaps up in here. If you can sneak your way into a short-term call, you get some sort of political bump. Seasonally, this is the time of the year when grains like to bottom. So I'm very interested in a trade here. But like I said, if we actually find, and we were very close to pulling the trigger here heading into that G20 event, I think I wouldn't be surprised if a couple of our site members actually did grab some. So let's see what happens, because I did see that one of the talking points of the G20 meeting was that the Chinese agreed that they were going to buy some more U.S. ags. So you might see a nice little pop here in the grain market. So that's more stock market-y talk. Sorry, guys. Actually, I'm kind of having fun just sort of walking through the past week of tweets and sort of news and stuff that I've been telling the public. I kind of like this because it sort of gives you a backdrop of what it is that I do. I think actually we really kind of left off last week's video and sort of weekly offering with this idea that it kind of looked like we got a head and shoulders pattern forming here. And the roadmap sort of coming out of this was I thought we were going to sort of consolidate and then we were going to break either higher, which would be a bullish bot setup and all that kind of talk, or lower back down into reload zones against these original lows. And remember that fantastic level. And of course, there is that bearish AB equals CD objective. And you can see that actually being overtly bearish through here, probably not the best idea. So market rallied back there and formed a bit of structure. And I posted these charts when I came back from Liam. You can see how they brought the market right back into that purple box that we talked about last week's Broiler Chicken show. And what I found fascinating about this was, if we draw our fibs, and I debated whether to draw it off of this high or this high. I did like this high because there's market structure right there that sort of frames our top. There's the big M. And if we did that off of these lows, it painted that reload zone, which happened to be 61.8 Mountain Man, is that big juicy gap. There's one more little cheeky gap up here that I was expecting to get hit, but look how the market came up. There's that purple zone, tried to push higher here, and then just M'd out. And the old phrase, and if you people on YouTube haven't ever heard it before, remember, if they ever see the market smiling at you, get ready for trouble. So, there's that sexy, awesome, killer ass buy level. Wow, what a level! Market went round. And then, kind of like sort of really awkward place. I think I talked to you guys about like sort of tennis analogies. I don't know, taking a long shot in here, very dangerous. And then in comes a big old M through a red box. That's not a good sign. Then, of course, we talked about the claw. You can see sort of the claw concept. So we have location, we have structure. If there was any sort of sign of divergence through this, I could actually make the argument that that's a top and not a bad level to start thinking about shorting. For the traders, actually midweek I did a very extensive review. So there is that M. This happens to be off of the OK coin forwards. And there is that sort of trend continuation. We're going to bot our way up to $5,000, or we lose Ray Barbecue's level and back down we go. Brian ranting about supply and demand for crude. And this is what really interests me is that, and you might argue that the stuff that's going on in the Middle East right now with the leader of Saudi Arabia, just terrible story. And then them sort of blatantly like high-fiving each other at that G20 meeting. Oh my goodness. I tell you, these guys they're not buying points, and now if Mr. Putin has turned up the temperature in the Ukraine, oh God, it's turning into a nightmare. It's poor Ukrainians, but nonetheless, I'm sure you can make the argument, poor Russian, people that live there as well. So I'm not even going to touch that stuff. But if we actually look at the supply and demand dynamics of the crude oil market, crude oil, of course, is a classic commodity. It's a hard asset. As the baby boomers sort of moved out of their life cycle, out of the workforce, and into retirement, demographically, they basically hit their peak earnings years right in here, and their transition into retirement, where they were going to sell assets. And buy things like government bonds, nice, safe, and secure, and go retire in Florida or wherever, Arizona. This is sort of my 17 and a half year, what I call the fear cycle, but basically commodity cycle. That's actually come to an end, right? There is sort of the beginning of the cycle. 17 and a half years puts us there at the end of the cycle. And ironically enough, there's your big honking cycle. This is the period when commodities should do well. And what's fascinating about this, of course, is that I find it, incredibly fascinating. Always a student of the market, always a student of history. But basically, this commodity was completely front-loaded. There was, there was one political party that was in charge of Washington that was extremely oil-friendly. And wow, did they ever take advantage of that? And they're like, literally the day that they sort of lost power, they just walked away from the market. And we're just sort of living in the aftermath of that pump up. You might argue that Bitcoin could do exactly the same sort of thing here, guys. Don't be shocked. But what I find fascinating about this is that this is the end of that cycle. I would, and prices sort of sitting, waffling in sort of this $75 area. There's no reason why we can't. In fact, I don't know whether these charts go back far enough, but let's see. They start in 84. But, this market topped out in 79, 80. Remember Iran and parading around American hostages and all that. But this thing topped out at like $50 up here, somewhere up in this area. right? So, this is what I think our future looks like for something like crude oil for the next 17 and a half years. And frankly speaking, and I've sort of said this in my rants and my tweets, oil is a 20th century product. If Mr. Tesla has his way, we're all going to be driving electric cars here pretty shortly. And in fact, they have like the government of BC, and I love BC. I mean, you got to hand it to them. They totally think they're the center of the universe. It's so beautiful. But they've basically made it public policy that no cars will be sold in the Lower Mainland that are not electric by 2040. They've basically set the standard. And what's fascinating, of course, is if we think of fear greed cycles, right? And we say, okay, well, that was 17 and a half years of North America feeling friendly commodity cycle. And keep in mind that last cycle finished with oil on its knees, right? And who knows where quote unquote knees are this cycle, but really, it's interesting how they say like 2040, this doesn't go out far enough, so we just have to sort of eyeball this. But really, this sort of cycle kind of, I don't know whether is that equal? It looks roughly equal. But it's interesting how everybody in there, like, and I find it fascinating. We're probably going to hear more and more of that by 2040. Fossil fuels will be banned, but on the roads, that kind of talk. That's going to be actually, that will mark sort of the end of that sort of greed cycle where commodities are just absolutely just given away. So okay, so that's crude, and you go, okay, fine, Brian, that's crude, but were there other commodities? And if you think about things like copper goes into everything. And you can see I've had this conversation recently. Can you see the fear greed cycle? And the interesting thing is, like I said, this cycle started 2000, somewhere in that area, right? 17 and a half years takes us to somewhere in this area. That was the copper commodity bull. And I think, I don't know how far back these guys go. They only go back to the mid 80s, but you could make the argument, same sort of thing, inverse cycle through here. Copper topped out back in the early 80s. We've done our sort of gold analysis, so yada yada yada. I don't want to belabor this point too much. I just think that the supply and dynamics for something like crude oil have changed. And it doesn't really surprise me to see this kind of drop. We're probably range bound, and you're probably going to find some support against value low here. That seems logical to me. We're right at the POC of this entire range. No real quote unquote buy signals here. If anything, dead cat bounces. You can see we got a beautiful moving average cross over here on the weekly charts. The trend is definitely turned down. I could definitely see dead cat bounces in here, but I don't know. It's awfully tough for me to make the case to be investing in crude up at these prices. Very, very expensive. And, what's really interesting is we kind of doing this in the gold market, and, a lot of the gold bugs, I think basically Bitcoin ate their lunch this cycle. And if we look at the gold market, I think that ironically enough, gold is only got maybe about a 20-30% premium in it over what the cost of production is. So, we may see gold prices come off here. If crude's coming off, that's deflationary. I wouldn't be shocked if gold prices had to come back down here. Also, too, December's kind of I think Thomas says December's kind of a tough trade for his gold business, but we'll see how that goes. I suppose you could argue traders got to trade. There is a bottom that's working here. You could be playing this to the upside, but considering what crude did, and it's at the front of the commodity cycle, it really wouldn't shock me if gold had to do something like this after it's done, whatever its ramp up here is. I wouldn't be surprised if we hit mountain, but this I think is 38.2 here. Yeah, 38.2 right on the nose. Oh goodness. And actually, we haven't given Ray as much credit these days as we should. But, Thomas, he absolutely loves his barbecue level. Can't predict trend without a resolution of Ray. So I think Ray is definitely, we like to call this, there's a guy that when I was at the prop firm, they used to always have him come talk to us. His name is Ray Burchette. And we affectionately on the site call him Ray Barbecue. So I think right now we're going through a 38.2 resolution test. If we can get our butt up into here, then reload zones seem totally realistic. I don't see any reason why we can't tag this trend line from the underside. But there's a lot of heavy slogging to go on right here. This is a tough one. I kind of like toss of the coin. Could break up, could break down. Place your bets. But the interesting thing about this is if we do break down, right, I don't think actually there's a lot of down that the gold bugs have to worry about, because when we did this sort of cost of production analysis for the gold miners, it was, they're sitting at somewhere between, the really, really good ones, their cost is like 800-900. And the marginal ones, it's like 1,000-1,100. So long and short of it here, down around $1,000, I think you're basically getting into that sort of buying value in the commodity. Now, the irony of all of this is that if there wasn't this thing Bitcoin, my hunch is gold could have been $8, $9, $10, $20,000 an ounce into that fear cycle peak. But Bitcoin basically ate its lunch. So, fascinating how the world sort of works and how history turns. Nobody expected that. And we always say you can't write better fiction than reality. Okay, so I could probably go on here forever, but I thought I was getting pretty close to today. Really interesting story about a World War II veteran who just recently passed away. I really do think this is the kind of thinking that I have. What I find fascinating is as people get really close to the death, they start to think about, what's the right thing? What's the good thing? I'm all about doing the right thing, that kind of person. I was really touched by this story. Yeah. All right. So, moving along, Bitcoin through the week actually failed off of that head and shoulders that we talked about. In essence, broke that bot pattern that we were conjecturing about. So here was that head and shoulders. This is off a lower time frame, 30-minute chart on OKCoin. We were sort of postulating if it was bullish, it would resolve up. If it was bearish, it would resolve down. So it resolved down. What I found fascinating about this, OKCoin didn't hit this 61.8, but almost all of the major exchanges did. And we'll talk about that in a bit, because I think that was a pretty important event. And then the fact that we all pivoted right up at this 78.6, also a really important event. So there might be something bigger going on here. I did take a short, full disclosure, you guys on YouTube, no point, I don't blow smoke up people's asses. I just, simply tell what I do. And really the way I judge whether I'm actually a half decent trader or not is, did I follow my trading plan? I like bot setups. You can see we had the bot levels on here. 25 was hit, 50 was not hit. So that meant the bot was still alive. If I got a third lower high, I could get short. And I targeted this original M top here to short. And I was working away, feeling pretty good. And then at about 2:30 in the morning, thank you, OKCoin. Gotta love you for that. Boom. Alarms going off, stopped out. That's trader's life. And if anything, what I said in this, which I think is really relevant to us as sort of traders, is you better make damn sure to respect these stops wherever you get filled, or else this might happen and your account might get absolutely destroyed. And we don't want that to happen. Remember what your number one job is to do. So I didn't like it, but when the alarms went off and all hell broke loose, I had to walk away. It's just what you have to do as traders. I don't like losing money, and it was a small trade. So it really, I'm just sort of, well, it was a small trade. We'll just leave it at that. I'm willing to take the loss and just next bus in 10 minutes. And sure enough, they worked the market up into this reload zone. So again, I have reload zones in my trading plan as location. So I went right back into stalking mode. As you'll find out through the week here, OKCoin had fun with me this weekend. But anyway, that's the way it goes. I had fun over the weekend trying to wrap your head around this. And this is kind of a fun puzzle because there's actually a lot of tricks and a lot of sort of nuances you don't actually see on first blush of this puzzle. But I swear, I think I tried to answer this puzzle like 5 times and got it wrong every single time. And it just goes to show. And one of my answers to a guy that I was talking to with about this, I just simply said, look at, you know what, this is a perfect example of this is why I trade setups. Everything's pre-vetted. All I do is if this happens, that happens, that happens, then I do this, and else I do that. Because if I actually start to think and I start to use my brain and analyzing the market, I usually end up getting myself in trouble. So turn your brain off if you're a trader and just trade your trading plan. Put your opinions away, just trade your plan. And if your setup's not producing desired results, well, maybe go find a new setup. But anyway, so okay, so that sort of brings us up to today. This morning I woke up, oh my God, the SEC's going after the ICO people really hard here, eh? So just be forewarned. Interesting how nobody was really interested in that tweet. But it was fascinating when we went through that whole sort of run up in crypto there a year or two ago. We had a lot of people come to us and say, hey, TRI should get a coin. You do your altcoin account and off of a coin and all that kind of stuff. And for some reason in the back of my head, I just sort of was like, you know what, I'll wait till the dust settles after this nutso rally, and then we'll think about doing a coin. And wow, am I ever glad we went that route. Holy cramoly. And I find it fascinating that other devs and stuff that are in this space, they've actually told me, Brian, I'm just on the down low right now. I'm staying quiet. I'm keeping my nose clean. I know nothing. So, all right. Tooting our horn a little bit, but I think if anything, this is a really, really, again, you YouTubers that are going to watch this, this is a really cool little tool for you to find out what the big fund managers are thinking about the economy. Every quarter, the first couple weeks of the quarter, fund managers get big whacks of money handed to them. Pension funds, California Teachers Pension Funds, one of the biggest sort of investment funds in the market, mutual funds, index funds, all these funds get whacks of money thrown at them every single quarter to buy, and they're sort of given that money on a quarterly basis. So just watching how the market acts the first couple of weeks of the quarter is invaluable information to tell you about the rest of the quarter. And I got to tell you, this quarter's report, these fund managers were not touching technology with a 10-foot pole, and they were parking their money into utilities, which basically says that they think that we are at basically market top, right? Getting ready for a bear market in stocks and very, very early in the recession cycle, if you see us there. And what's interesting is this is the first this is sort of like a report halfway through, just sort of what are they thinking, what are they doing, and then this was the full first 2 weeks. Again, think your Apples, your Amazons, your Nvidias and all that, right? I mean, they've gotten their heads handed to them. We could have basically taken the information through this first 2 weeks, like this was October 13th, right? That gee whiz, the utilities are going to get some serious attention. And more importantly, what does that tell us of where the fund managers think we are in the economic cycle? I mean, this is incredibly valuable information. And sure enough, today, news headlines, utility stocks have beaten the S&P in the 2 months of turbulence. And in the long run, it's not really a comment on the long run, but I find it fascinating how through the entire quarter, that's basically playing out with what the first 2 weeks study told us. Incredibly valuable information. All right, and that sort of brings us to today. So what the hell's going on today? Where should we start? I actually don't mind the idea. Well, first off, let's take a look at what happened in Chicago. So there is that purple wedge. There is that M that we talked about right in the reload zone. If we draw the fib off of here, and what's interesting is, we say if you ever see the market smiling at you, get ready. And notice that that's basically where the market stopped, right? So what that did was it gave the Chicago boys, if they wanted to get short, they were basically given the window exactly where to get short. Now, the only missing piece to all of this was I was a bit surprised that they did not fill in this gap here. That surprised me a little bit. But nonetheless, we said earlier, if you ever see the market smiling at you, what should you be thinking? So we were getting warning signs that, things aren't looking too happy. Now, remember, there's our super sexy, awesome, super killer trade level way down here. Now we're way up here. I mean, the irony of it all is for Wall Street traders, geez, that's like a 15% return on their money. They'll be happy with 15% printed annualized returns in one trade. You did your whole year's work. Anyway, the point of the matter here is we're starting to get some signs that things are troublesome. And I ran, and we'll look at this on OKCoin. It's a bit messy. Frankly speaking, I'm starting to lean towards liking these CME contracts and the CBOE product a lot more with every passing day. But I think what you can sort of see just off of this is we're working our way back down into this reload zone. And notice how the 78.6 here is just going to basically just bring price right back down into the original bottoming level. And also, too, remember we talked about claws before. You can sort of see this claw here. There's the POC. And we used to have a funny little icon. And the irony of it all is he's a total CME trader. So this is totally apt for him. But Mr. Hoagland would be very interested in buying below value here. If he could sneak in on some sort of panic dump on what we call single ticks on the session profile, my hunch is he'd be all over that trade and just simply risk to new lows. And if it breaks new lows, you just walk away. Extremely high anxiety. Unfortunately, good old Hoag has been bald for quite as long as I've known him. So, if you do decide to trade that way, you're going to learn. And Alex, I think you've been trying to trade Hoag's single ticks or Jesse James setup, eh? It's not easy. It's not for the faint of heart, that's for sure. But, there's a reason why Hoag's a 35-year floor veteran. Anyway, the point of the matter here is I'm, looking at Chicago here, I just get the feeling like you have your market structure. You can kind of see how this is like a head and shoulders up here. So very fractally looking top, which sort of suggested we had to come down into these levels anyway. And now what I'm sort of seeing out of Chicago is AB. And then we'll clone that. CD, which again sort of takes us right down into Mr. Hoagland's level. So let's see how Chicago opens up in the morning, but there's no doubt about it. And we should do this, next week. Is we sort of, set you up with, it kind of looked to me like purple triangle. We were going to have to work our way up into here. They did that. My hunch is we'll have this AB equals CD objective on the screen. If this high is not taken out here in earnest, then these levels, I think, are valid. And also, too, I had pointed out on OKCoin, there's a really nasty little tail right down there, too, that's really suspicious. You can also see it in Chicago. This, to me, looks like very suspicious. So, if you're a trader and traders got to trade, I would be really watching this level right in here. Maybe even target something like a buy off of those candle body lows and let the dip into this window here set up your trade. That looks like a really interesting level there. Now, through the weekend, they bid things like OKCoin up. So we're probably going to find that the Chicago boys are going to gap higher again. And, just like we did this wedge here, we're probably going to see somewhat the same sort of thing here. So we could go horizontal support and resistance, and then our trend line, like so to like so. All right, so that's your head and shoulders. And there's another triangle. So let's draw this triangle, and let's see if we get a nice counter trend rally into that window following. If anything, what I'd like to see is them gap this higher. That would actually force this ABC up into this window, and that would actually paint like a level like there or somewhere down in that area. So just like we did off of this one, let's do this one, and let's see if we can get a nice, and also too, we just talked about claws. I like to call them muoks. We had a gentleman years ago on the site that used to love muok. So also too, notice that's also a muok there. And then remember, this is the key horizontal support and resistance level. So I'm almost thinking that the Chicago boys are going to sort of try and bring the market back up into here. And then roll it over. But we'll see what happens. If everything stays the same and these highs are not taken out, and we start, progressively moving lower, then my hunch is down into here. So at least gives you a couple levels off the Chicago levels to think about. And probably also too, we just do a simple trend line, boobity boo. Right? That's going to be some serious resistance as well. And we can also do another one here. So now we're getting super triangles. So you remember I had said earlier, location, location, location. I'm wondering whether there's some sort of location right up in this area. We could probably do a RLZ heading back up top. There's Mountain Man way up there. So a little bit high. So maybe something like a rally up into that area. We'll see how it goes. But that's all predicated on these lows holding. And frankly speaking, looking at this structure, it's a bit of a long shot right now. So let's revisit. This should be interesting. This should be a really cool chart to revisit next weekend. All right, let's see how all of these levels play out. I'm thinking dead cat bounce into sort of this resistance window. And fill in this notch up top here. If we crap out, then I'm thinking Mr. Hoagland and revisit against these lows. So there you go. Nice little roadmap. We'll go there and there. Something like that. Let's put a arrow there and an arrow there. And my hunch is resolution off of this range. It's a cute little range too. Bullish heading up into these levels, bearish heading down to those levels. So I'll take a screenshot of this and let's see next weekend how we do. And I'll even put it here on the site so we have that. I'll just look at it next week, and we can do a review of what our prognostications saw. Okay, looking at some of the exchanges themselves, here's a revisit of that 4-hour chart that we showed off of OKCoin. There is that head and shoulders that we talked about. Remember we said if it resolved bullishly, we were going to paint up into here. That was this sort of purple sort of projection. If we resolve bearishly, it was going to paint down into here, right? There's 78.6 just off of this range now. In fact, we could probably even just put that box on there now. So those people play in the casino. And it is interesting, right? We had said that this tag here through the weekend, on a lot of the exchanges, it did hit this 61.8. It just missed on OKCoin. But I also noticed too, which was really cheeky on OKCoin, this rally back was like to just under 61.8 as well. But we'll look at the hourly chart in a moment. So this was sort of our forecast, what we thought might happen. This is what actually happened. So the head and shoulders dumped. And fascinating, how the dump candle of the Head and Shoulders actually lined up with a perfect symmetrical top here. It was actually perfect, which shocked me. I actually put this out a little bit longer that, oh, we won't dump until we get way over here, which would have put this sort of dumpage like on that bar, which would not have been symmetrical. But it turns out the dump was actually perfectly symmetrical. Look at that, eh? Exactly symmetrical. So I often talk about symmetrics in the market, and it's probably, if I was going to do a new module for the course, I probably should get off my butt and do that. But the market loves to move symmetrically. So dump, like right on schedule, remarkable. Came into Mountain Man here, but the weird thing is it stopped just short of it. And then we ratcheted our way right back up top here. And what was interesting was coming out of this Head and Shoulders, if we look at the lower time frame chart, as I had said at the beginning of the broadcast, I hunted a short setup here looking for trend continuation, and boom, stopped out. See you later. And then I hunted a short setup off of this reversal here. And on this one candle, woo, boom, I got filled on a short against these highs, and I got stopped out on a break of that high. Maybe a little amateurish. Probably should have been risking against these highs if I was taking that short. But nonetheless, as I'd said in our community, I didn't feel comfortable being long in the market at that point. Short, beg your pardon. But as you can see, and this is, I think, a function of OKCoin. You have to understand that this is a derivative market, so there is no sort of direct correlation with cash markets. I did look at that move, and actually, here, why don't we move to that chart? Let me talk a little bit about that. So the 4 hour right now, I'm still thinking top of the range. Nothing really has changed with regard to that. The Head and Shoulders, I think, played itself. And ironically enough, I think the Head and Shoulders objective, we'll look on the lower time frame chart in a moment, is still active, and it's still painting a target down in here because this high has not been taken out yet. So I really think that what we just saw here on OKCoin through the weekend was just a lot of shenanigans. And what I find fascinating is I did see a couple of OGers on Twitter also sort of saying along the lines that, oh boy, here comes the weekend. Get ready for a lot of effery in crypto. And I think that's exactly what we got. And if we look at the lower time frame, you could totally see this. It's quite shocking, really, but oh well, that's the way it goes. So once upon a time, there's that Head and Shoulders. There's the Head and Shoulders break. Your target should have been down into this area. There is that dump into that 61.8. And what was fascinating about that was this was basically the close on Friday. So right out of the gate, and sort of those comments with regard to weekend effery in the Bitcoin market, this is basically where New York finished Friday afternoon. Beep, the adults have left the building. And right out of the gate, boom, they dump Bitcoin down. Break new lows. As I showed you, I had like bearish bot setups that had like 25 levels in this area. And we didn't hit the move stop to scratch level, so I could still hunt that. They rallied the market right back into this area, and so I strapped on my little short. Trade was working fine, and this was just moving slow as molasses, and I fell asleep. And then into the wee hours of the morning, you can see it was like 2:30 in the morning. Rant, 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 the alarms go off. How typical cliche of OKCoin to do that to all the North Americans. It was like, oh, this is exactly what everybody was expecting through the weekend. Like Thomas, he's my co-host for the Daily Briefs, and a very, very good trader. Yeah, every Friday afternoon, he's like, okay, my hands are off. Welcome to the weekend effery. I'm out of here. I'll see you guys Monday morning. So boom, got stopped out. And I'm perfectly happy with getting stopped out. It's just the way it goes, right? Obviously, I don't like losing money, but at the same time, too, I'm very happy that I followed my trading plan and just walked away. And as I had sort of told you, in hindsight, yeah, you probably could have covered at scratch and walked away unscathed, and that's probably what this dump was. But this counter trend rally here might, if you had had this trade on size, it might have wiped you out. You just don't know. So, if you are trading in size, then by heavens means you have to obey stops. Market worked its way higher. Divergence came in. Willie got stupid. And they painted a very interesting looking M right in a reload short zone, right against these original highs. I was watching this, and this is what I was sort of talking about earlier. And, I did lots of journaling through this because I think there was lots of really good information to learn from this. But you can see how they dumped the market down. And one of our site veterans really likes the idea of working orders against candle body levels. And I also noticed, too, there was a cheeky little gap. And keep in mind, this is a 30-minute chart. So we're going like total lower time frame. Total day traders. This is not your position people, position trading people. This is total sort of day traders. And of course, Bitcoin, if you're going to take setups off of things like 30 minutes charts, don't plan on going to sleep. Like I said, alarms go off at 2, 3 in the morning all the time. Drives you crazy. Welcome to Bitcoin. So, if you can't live that kind of life, don't day trade Bitcoin. It's just not worth it. There's lots of swing trades, position trades, but day trading, this can get a little hectic. So anyway, point of the matter here was there was this cheeky gap here on the OKCoin forwards. There is that clothesline market structure fail level. And I was willing to take a shot and basically work my order at that gap with the bearish divergence and Willie stupid at that level. But, I'm a chicken shit by nature. So that means that I don't like to take a lot of risk. So in essence, I just simply said, look, I'll join this trade. And if this high holds and it's a top, then great. I'll just sort of stay in the trade and we'll just work our way. And in typical casino, and I used to see this happen in the futures market too, they go up, pop the stops, and they did it actually over a 2-candle period just to make sure anybody who was thinking about going short off of this top, they got stopped out. Little bit amateurish on my part. I'm going to admit that. But nonetheless, I just said my plan was I was going to risk against this M top, and if the top was broken, so be it. It's interesting. In other trading plans, I'd actually say, well, look, and I'm going to hunt a trade setup, but I'm going to risk against the original high. And I think that's exactly what happened here is, this is and then we went after the stops. So the stop level was tripped up. I walked away literally on that. And, I followed my trading plan, took very, very, very small risk on this trade, right? Not much whatsoever. Did get stopped out. So it sucks. And then, of course, watching the market cascade its way back down. Boo, hiss, boo. At the very least, and sort of what I put in my journal was, I'm pleased that, I articulated why I was going to act a virgin, stupid, and I did act. And I got stopped out. I followed my plan, booked the loss, took appropriate risk. So on balance, psychologically, I'm not harmed. Am I pissed off that the OKCoin casino basically played me? Sure. Jerks. What I find fascinating about this trade is that, in essence, it came right back down to our technical objectives. The original objective off of this M top here was a 50% rule, and hopefully you can see that, in essence, this produces, if you go short off of this M, and you risk to new highs, and you take profits at the 50% rule, that produces a 2.79 risk reward. But it also does mean that if we do break these M's, you got to walk away because you just don't know what's going to happen on the other side of the trade. So that's what I did. And ironically enough, like me personally, I don't mind taking the loss. It's not that big of a deal. But what I actually posted in the lounge, TRI lounge yesterday, was the biggest heartburn for me is having to go to the community and say, look at, I wasn't right. I was wrong and I had to get out and I had to follow my plan. Ironically enough, shorts off of that level, I think were the right idea. But, I played the M. I had to follow the rules and I got stopped out. Boo, hiss, hiss, boo. Next bus in 10 minutes. And full disclosure for the community, or, especially YouTubers that are going to be watching this later on, M's in price usually work about somewhere between 60 and 70% of the time. Here's a perfect example where they ran the top. And ironically enough, the trade idea was accurate. It's just this time the M didn't work. I think too, though, there's some really good information about this, but I'm not going to delve into that today because I've been blabbing way too much. But there was some really, really interesting information about the way price acted all through here if we drill down to the lower time frames. But okay, so moving forward, where are we now? I think the technical objective on hunting shorts up against the top here, I think that was achieved. But at the same time, too, we're getting sort of continuation pattern-y type behavior. That's these AB equals CD objectives, and we talk lots about them going up. So I don't know. Harmonically, we're sort of sitting in the middle of the road. We haven't quite hit enough of these objectives to make me feel like she's done. And also, too, look at the size of that muak right there. It was funny how when we were looking at the higher time frame charts and looking back in the past, we saw lots of muaks up top. Now we have a big muak right here. So, you could argue that we could put a big heart right there. There's a lot of unfinished business, especially in that tail. That tail looks awfully suspicious. We do at present have a confirmed bullish divergence. So the whole reason why I was thinking short up here, Willie stupid, bearish divergence. The whole reason why I was thinking that, that was a shorting and, definitely not buying sort of area was that this all was internals was problematic. Now with this dump, we've actually created a very sharp bullish divergence. Willie never did get stupid. So it wouldn't sort of be a setup for me. Volume isn't really anything to write home about. I see the bears are pretty active here. The bulls kind of look like one high, two highs, three highs, and then where the hell did the bulls go? They kind of look like the bulls have fallen asleep here. So if the bears want to wake up and take over, they've got the green light, in my opinion. And like I said, I still have harmonic levels that seem to be working here. If we zoom out a little bit on this, some really interesting sort of ideas jump out at me here. As I had sort of said a few times here, this 61.8 tag, very interesting level. And a lot of people on the site pointed out that the cash markets did trade there. It is interesting how some of the cash markets did not break this high. So that sort of leads me to believe that, again, that was sort of like OK coin effery. If we look at things like, I think I was looking at Coinbase, right, which is a pretty good cash proxy. That rally never got anywhere close to that high, jerks. So that, like the gap fill, reload zone, shorts, gonna try and hit that market structure. That trade idea worked brilliantly on the cash markets, and it's a trader's life, piss you off, right? I mean, that kind of market top didn't really form very well, but nonetheless, shorts up in this sort of area up in here. There's a cheeky little gap on Coinbase right up there. The cash market, those shorts did work perfectly fine, and they never did break the top. And so that's sort of why I'm sort of chalking this up to this is really all about OK Coin and the casino. And it's interesting. One of sort of our whales on the site, he was like, Brian, I looked at this and it totally looks like they went after my order. So, that's the casino. Welcome to the casino. It's part of the game there. So, and interestingly enough, like Stamp just went up and just kissed that old high. Didn't do any sort of big blow off like OKCoin did, but oh well, that's the way it goes. So what are we sort of thinking about here in the short term? I think I've given you a pretty good idea. I'm looking for stabs down into this area. Fill in this fairly sizable MUOC. There's the original bottom. There's the Friday close out of New York. So you can see as soon as the New York futures come on, they're going to gap higher. The question is where? If they actually bring this market down before those New York futures open, then they might just open up this market basically. Well, that's not what I want to show you. Where the heck is that? Here. They might just open up this market where they took it out. I don't know. I find it hard to believe that they're going to gap the market through this double top here. This high. I find that hard to believe, but they might. Market will do any old damn thing it wants. On the forwards markets, and if I'm not mistaken, I think this futures market actually settled on Friday too. So we're probably going to see some fireworks out of these guys in the not too distant future. But I think probably the level you want to watch on these on Chicago futures is 39.90. Ooh, interesting level, right? Big square fat round number 39.90 there. And so if I go back over to the OKCoin, we're sitting 40.28. 39.90 would mean that by time they actually open up, and I guess that sort of corresponds because there's a bit of a premium in OKCoin. So my hunch is by the time they actually open up this market, OKCoin prices will be down here. The only thing that would sort of negate this sort of bearish leaning right now is if we actually had some buyers show up here. This is a bit disturbing how the bulls have just sort of disappeared here. They just vanished. That's not a good sign. And we've got these AB equals CD sort of working away. This one didn't quite hit its objective, so that's still floating out there. Now, the cool part about this, and this is what I was sort of alluding to earlier, which I'd really like to see, is if we're really lucky, really lucky here, I don't know whether you can see this or not. I'll maybe change the color. Dun, 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 dun. Let's make this really big. There we go. This could potentially be a harmonic. A Gartley pattern. So there's that 61.8, which I thought was so important, right? Actually, I have to go out. Right there. Where does this ultimate, if this is a Gartley, we'd like to see 61.8, then, and that's why I thought this level here, 78.6, this pivot off of this level was actually really important. Because Gartleys, they love 61.8, and that's pretty damn close. Right, that came to, what do they have here? 61.3. I mean, that's awfully close. And like I said, some of the cash markets actually did hit that 61.8. Then counter trend rally up into this sort of 78.6, 83.7. That's awfully close. And remember, we said this was a bit of an FU move. Some of the markets, the cash markets, they never did get up through these highs. And then ultimately, if we can come down and tag this 127.2, and also it's a 78.6, very powerful sort of double harmonic level, that sets up this Gartley pattern. And if we go A, B, C, D, thinking harmonics, notice that also is in that level, right? I guess that would be up in there, somewhere in that area. And I'm kind of thinking it would be awesome if it was on this confluence right off of these trend lines. So, ironically enough, we might actually get a pretty big dump here over the next 24, 48 hours. And if we can come down into this level here in earnest, in a panic, in oh, sky's falling, right? That actually might be a sign for Gartley. So ironically enough, when the market is like dumping hard into a level, that actually makes a level more important. If we just sort of slowly stair stepping grind of death lower, then actually that's not good, because then we have to have the big dump at some point. So ironically enough, I do like the idea of a nice test of this 36, 3,700 area reload zone. And if we can get that on any sort of sign of divergence, then I think we actually have the makings of a little bit longer term bottom, right? So that Gartley pattern would be, and it's a bullish Gartley, which is good, right? There to there to there to there. If this thing comes down into this level and it's on any kind of divergence, I think, my friends, we got ourselves a floor coming in. So let's really keep a real close eye on this level here over the next week, because I think if we're really lucky, we might be painting a significant pivot. This is a bullish Gartley, and if it does come in, Gartleys are extremely powerful formations, and it would be a harbinger of a pretty substantial rally to come. But we'll see what happens. Only time will tell. I think on balance, we should, over the coming week, keep an eye out for what is that? And this is OK Coin 3660 up to 3,800. That would be just the sweetest, awesomest setup here for a higher time frame trade. So I'll throw that on the YouTube page. We'll take a look at how that does through the week as well. And this is, please understand, everybody that's watching this is pure conjecture, right? I'm just sort of talking out my butt. I'm trying to give you levels. If this level does come in, obviously consult your trading plan. What do your setups look like? You want to drill down to a lower time frame at this level and really start to articulate those setups, L-tangonators, divergences, W's, all that kind of fun stuff. Rock on. I have no idea what's going to happen. We might just blast our way higher here. And if that's the case, then the Gartley comes off the table. So that's one scenario. If we just simply continuation pattern our way up here, ironically enough, you can make the argument that this is not past 66%. So you could technically argue that there's a potential bot setup trying to form here. Right, so there has to do at least 33%. We got that on the fail of the head and shoulders. There's 66, right in that reload zone. We did not go beyond 66 here. So if I get one low, two lows, and I get another key low, then I can actually start thinking about trend continuation. So this is really interesting times we're in. Hunt your setups, trade your trading plans, right? Get in there and have some fun. All right, let's they always do the coordinates a million. Actually, that's not so bad. It's not half a million. Oh, that's too much. There we go. Okay, so we came down, bounced. Here we are. You can see where the bot entry level is. We'd really like to get a nice little W to come in below that. So not setting up the prettiestly. But let's see how that goes. We'll keep that on the radar screen too. We've given you sort of the Gartley thinking that could set up trade location down in here. And here is our bullish bot scenario as it might be developing. So we'll keep an eye out for that and watch for that setup. So it looks like the pivot there is 4,000, which makes sense. Big fat round number. All right, so I've got a nice little cascade of trades, charts. They're working on YouTube page. Okay, the only other thing I wanted to do today was somebody had asked specifically, I've got a few little juniors working here. We picked up some duck notes recently off of that double bottom. We picked up a little bit of the Doge off of the double bottom. You guys should see the logic in these trades. Not rocket science. But somebody had asked in the level one if we could just review one of their ideas. So I will do that now, and then I will send you all on your way. Where the heck was that? B&B BTC, and that is on Binance. B&B BTC on Binance. And how's it's a tough one. How's Binance doing these days? Actually, it would be kind of cool to get sort of a YouTube sort of commentary, if you will. Is Binance going to make it through all this? The SEC is coming down hard on these exchanges. We have quite a crew on the fundamental side on TRI, but it was interesting. One of the comments from last week's video was somebody basically took my Mr. Penis Eater's "my cost to produce Bitcoin is $1,000" reference to heart. Please understand, I'm just talking my opinion. The irony of it all is because nobody really knows exactly what these numbers are. But I like to use that reference, and also too, the old historical breakout was like what, $1,100-$1,200. So usually we tag those. So I wouldn't mind, if you want to leave a comment about how Binance is doing. I wouldn't mind just sort of getting a general sort of, what's the public thinking about Binance these days. Jacques says Binance is based in Malta now. Is that where they've gone to? You zoom out on this chart, and I hope everybody looks at this chart and just simply says, are we buying at the bottom end of a trading range? If anything, this is our classic, tennis court analogy. Where, we ideally want to, if this is the net, right there. Yeah, what a pretty net. And doot. And maybe we'll just expand this a bit. And ideally, when I used to teach people to play tennis, right, try and play at the baseline or try and play up at the net. But try not to sort of play in this area. This is what they call no man's land. It's a bit dangerous. Because, when the guy hits the ball over the net, what usually happens is the ball bounces right in here, right? And then it bounces up. And if you're playing at the baseline, you get it sort of presented to you at a nice place. If you play in no man's land, you're trying to hit the ball just as it's bouncing on the ground, which is pretty tough. So I might make the argument, same sort of thing that you're seeing on a lot of these kind of assets. And of course, if we look at this asset from that perspective, and this is where I like to do those reload zones. It just makes life a little easier to try and see where sort of playing at the baseline is versus playing in no man's land. So if we look at this entire range, and really, I think, in this crypto space, you really have to now. You don't have any choice. As we were making higher highs and higher lows, as long as we just kept making W's after W's after W's, great. Just keep following it up. But you can clearly see we started off here, and I suppose, actually, this is the middle of the summer. So you even got yourself a really nice seasonal rally there. But hopefully everybody can see right up here, right? We even did this for you earlier. And if you've never seen this before, write this stuff down. All you YouTubers, this stuff's gold, man. I learned this like 30 years ago. If you ever see the market smiling at you, let's do a nice big smile. Right? Get ready. So here, fantastic example. This is a sell signal right in there. I'm not going to say it's easy to do, right? It's going to take a lot of practice. I love Graham teaching our level oneers. He's like, you got to take 100 paper trades before I even want to talk to you, which is awesome, right? Because you really have to sort of get to learn how the heck this process works. I used to teach, and I still do, 20 paper trades, then 21/10 size trades based on your risk management identification, in your plan. And only after 40 trades would I would consider you ready to actually like risk, a real account size trades. But I love how Grimm's like, nope, 40 is not enough. I want double that. The more practice that you do with these principles, the better you're going to get at it, and the less anxiety you're going to have about risking your hard-earned money in the marketplace. And keep in mind, this is risky. And everybody has learned over the past 8 months, I guess 11 months now, about what the unwinding of one of these markets looks like. And that, like, this is a sort of a side note. There was a really nice lady, I really liked her a lot, that came on the site. It was about January, February of 2017. And, we were floundering around $1,000, $2,000 on Bitcoin. And she was like, well, is this a good time to buy and invest? And I was like, yeah. We're ramping up here, so clearly, there's a bit of risk in the market. Fear, greed cycle, apexes. The way that gold acted through the last fear cycle. I guess it shouldn't have surprised us what they did to Bitcoin. Is it realistic, based on the fact that in January, February 2017, it was trading at $1,000, that it would be 20 times that price within less than a year? I don't think that was realistic, but that's just what happens. And of course, the public gets all sucked in. This is easy money, no problem. And now we're going through the process of unwinding all that, which sucks, because I remember a few years ago, we were doing crazy, outlandish upside Bitcoin projections of $4,000 to $5,000. Do any of you guys remember that? Have any of you guys been around the site long enough? Kevin, I know, San, you've been around since we had those talks. Yeah. But Kevin, maybe you've been around, but I don't think most of you that I see in the lounge here, you haven't known me since then. Rob, all right. Amanda's Penthouse, that's right. Where is Amanda these days? Gee whiz, the good old days. Damn. Yeah, and Draper calling for 10,000 seems so far-fetched. Well said, Sam. So, they took this market to just ridiculous, stupid extremes. And I might argue that this is just the process of them cleaning this up. And I think it's really important. And I see a number of sort of OGs on Twitter and stuff all saying the same thing. Bitcoin isn't going anywhere, and Bitcoin doesn't give a rat's ass whether it's 3,000, 5,000, 10,000, 15,000, 8,000. The only thing that Bitcoin cares about is that damn network is continually validated. And there are enough validators validating the network that we know that it's quote unquote decentralized. That's the only thing Bitcoin cares about. So can we make the argument that Bitcoin currently is decentralized? Is anybody able to do a 51% attack on Bitcoin? I don't think so. I'm sure that Mr. Craig Wright guy, he's probably going to take a run at it, but we'll see. And Sen makes the perfectly valid point that one Bitcoin will always be one Bitcoin. So the point of the matter here is that this is just the price exploration process. And frankly speaking, I don't think these cryptocurrencies are going anywhere. Now, I will say that those people that came to crypto and did ICOs just to get rich and fleece the public out of a whole bunch of money, and really there's no underlying value to their ICO, those people, their days are numbered. In fact, actually, we used to have a funny joke on the site, and I've made reference to it even recently on the site. that you could argue with what's going on with the SEC right now. It's simply the process of removing our buddies from Cabbage Coin. Everybody remember? I wonder if YouTube, let's see, none of the OGs, none of the TRI people that are watching on YouTube, but anybody who's not a TRI person watching on YouTube, do you know what I'm referring to when I talk about Cabbage Coin? Or should I say cabbage, right? Because after all, it's highbrow. If you don't know what I mean about cabbage, then really cabbage is all about what we're trying to actually get rid of from crypto. And there is still, I think, a underlying element of cabbage in crypto. That's this guy. These are the guys that the SEC would like to remove from this space. So this was a fantastic interview that I would consider a real stand-up guy in the crypto space, Alex Stirk. He ran a show called Block Talk. He tried to do an interview with this guy, and unfortunately, the interview didn't go very well. But you have to understand that this is what we have to get rid of. We have to remove this from this space for us to take that next step. And I would argue that really that's what's going on in the altcoin space right now is we got to get rid of this kind of behavior. So looking at your coin, back to what we were supposed to be talking. That's why I'm a bit concerned about coins that are listed on Binance exclusively. Is this thing listed? And B&B, isn't this like their local, almost like their currency there? Who knows the B&B? Yeah. So this is, and I think you pay your fees in this BNB. So you might even argue that this BNB in itself is a proxy on sort of the users of Binance. Is it ramping up or is it ramping down? And I might make an argument that through this bull market, it was ramping up. And you also might make the argument that there's been a pretty big seed shift here. Something has changed. I don't really like, quote unquote, investing in these kind of proxies because this isn't really the whole sort of story behind decentralized networks, is it? I don't know if this is similar to Tether, but I definitely wouldn't be investing in something like Tether. All Tether is supposed to be is sort of a cash proxy. So you could argue that the guys here say that the only reason why they hold BNB is to pay for fees if they're trading on Binance. So you could make a very real argument that whatever the trend in this thing is, it's simply a proxy on activity on Binance. So having said that, something here bothers me immensely. Hopefully everybody can see here that we seem to have a bit of a floor on price here, trading range. And we've failed through that. So that's not a good sign. And it's funny. I often see a lot of people on Twitter say, well, geez, to be a technical analyst, all you got to do is just draw a couple triangles and look at that. I'm a pro trader. So, I mean, you call a spade a spade. Anybody can draw triangles, and now you're a pro trader. Way to go. But when I look at something like this technically looks very bothersome. Now I can understand, traders, although I don't know why I would be trading this other than, like I said, maybe it was a proxy on Binance activity. But I suppose I could understand. A trader might say, well, Brian, sure looks to me like we've got a floor down here. We've got this key low. We've got this key low. That's the railroad tracks to a certain degree. We've got this key low, this key low. So there is some sort of buying interest off this level. And then, we simply say, if we lose these levels, look left and woohoo, your next support level is all the way down here. So I could definitely understand somebody coming to me and say, Brian, if we dip into these levels, and actually, we saw this kind of on Bitcoin, same sort of thing. That if we dip against these levels, then what we should probably see is some back and forth. So as you can see, we slammed into that level. And then on the other side of it, just like you see here, think of sort of fractal head and shoulders, right? You could have said, okay, well, if we slam into these levels, odds are we probably got to rally back up into sort of these levels. And that's what this rally is. And then two, if we did like, things like fibs going the other direction, 38.2, good old Ray barbecue. We're not really allowed to make a great decision until this thing's been resolved. And in this case, we bounced straight up. And you could even argue if you looked at this here to here, and then here to here, you can see it didn't quite get there, but it was sort of painting up into here. So the fact that the market went and just nastily topped out here, and if we do a clothesline, you'll see this in glorious Technicolor. Look at that M. Oh, kajish, 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 right? Triple top. Oh, man, ugly. That, in my opinion, is the market testing that 38.2 and saying, no, you're not quite ready. Sorry. So back down we come to the bottom end of the range. Doosh, right against these levels again. Boom, 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 right? Anybody who did actually buy against here, institutional players, we buy down markets, we stop the bear, blah, 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 blah. Kind of like the same thing we saw in Bitcoin. They were given lots of opportunity to square up those positions, right? So by time and really this looks a heck of a lot like Bitcoin. So by time we actually broke this triangle here, the institutional players that had a vested interest in defending this level, they were probably gone. I suppose your next area of key support's got to be down against this level, right? Right down there on the magnet. So, had you taken your shot through here and your trader's got a trade, I don't really like this because fundamentally, I don't know why I'd be buying this thing anyway. If I was trading on Binance, I'd have to have a little bit in my pocket. But looking at this, what I would say is that Binance is losing interest in doing business there. The fact that we failed through these lows means you better get the frig out of there if you were trading this thing. Like I said, they gave the institutions plenty of opportunity to cover. And what's really cool about this too is, and I often see this in the market, people say, well, Brian, they didn't give me an opportunity to square up. Bullshit, right? If we actually draw a line off of this low here, which is, what we did off of this AB equals CD, right? And then we have a lower one here, but if we go boobity boom, and we go boobity boom, right? So you could say, all right, if we lose this level, then get the hell out. Look how they lost the level, and then they rallied it right back into the level. So in essence, and that also was on a gap too. So you could make the argument that all they want to do is just fill in the gap, and this up bar fills in that gap, and you can't say that you weren't given the opportunity to get out. And boosh, down we go. I suppose, like I said, now looking at this range, bring this down to here. We can start making the arguments that you've got this key high, but keep in mind that low is all the way down there. And I guess on the bigger zoom out one, let's go. All right. So on the bigger range, we're coming into a 61.8. There's 61.8 to 78.6 off of this range. I got this sneaky suspicion that if we do 88.6, it's probably going to line up nicely off of that level. Let's see what we get. Yeah, 88.6, 61.0 of the entire range. And then you're finally coming down into sort of this traffic area. The issue there, you could make the argument, and of course, if you're long this, you're not going to like me doing this. I'm sorry. But you can make the argument now, A to B, and C to D. All right, so if anything, this AB equals CD is also suggesting a nice serious tag down into this area. So considering how we just lost this, and actually, it's a really cool sort of symmetrical study. Remember I was talking to symmetrics earlier. Is you can actually, let's see. Oops. Let's go like this. And then go like this. And then go like this. All right, so there is the rectangle. And then what we're going to do is we're going to go like this. So now that's sort of symmetrics. So my hunch is, and of course I totally eyeballed this. This isn't exact, right? But my hunch is symmetrically, the market wants to come down here. You can see the very noticeable muak on the chart. So doink, that's probably a key objective. Against these lows, there's this awfully funny big tail in here. So maybe there's still a little bit of unfinished business. It's interesting. Sen is here in the lounge, and we're just, this is one of his scripts that he wrote for TRI, which is, well, I mean, for the world, it's just so awesome. But not a bad idea when you are looking at these levels to now come down and see if there's any price gaps on the chart. Actually, it looks pretty clean. It's not bad. So you could even go down to like, say, a 4-hour off of these levels. See if you got any gaps down in here. Actually, again, pretty clean. Oh, there's a bit of a cheeky gap right there. And anything down in here? I'd be surprised if there wasn't one right in here somewhere. Oh, look at that, nothing. Yeah, pretty clean. All right, so I think we sort of talked a bit about higher time frames. This is a really looks like an important level 1, 2, 3, 4, 5 lows here. So if we zoom back up, oh, that gap's just sort of sitting out there. It's interesting how that gap actually is a node. So I do kind of like the idea of the market coming down into this level, 78.6, 88.6. There is sort of those key lows that we talked about just a moment ago. And I'd be sort of hunting for sort of trade setups down in here. Now, it is interesting to see we are sort of trying to pivot off of this high. And that 78.6, look how that's setting up there. So it's not really the best level. Keep in mind the dailies, they really haven't turned yet. But I suppose, if your trader's got to trade, Brian, I'm active. I want to trade setups. Yeah, I mean, you could be looking to try and get in. Thing is, I don't know whether that's iffy. But, I can understand guys trying to buy against the bottom end of range, and they'll just risk to a break of these lows. Right. So it makes, isn't that interesting? So that actually went to a new lower low there. It's a tough one. I think I'd probably leave that because I don't really like the higher time frame trade location. So maybe you get nice little counter trend rally back up into resistance against these. I don't really like the higher time frame trade location. Yeah, 78.6, but let's, because we just made a new low there on the lower time frames, I think you got to give this a bit more time to clean up. So position trading, absolutely nothing for me to be interested in here. So fundamentally, I don't know. Tough reason to be considering buying this. I do like this as a proxy for sort of the health of the crypto market. And in that regard, I think it's telling us that the demand for these payment vehicles on Binance is waning. Willie is just entering stupid. So definitely not a place to be a seller, that's for sure. And momentum looks like it's coiling here, right? I don't really see divergence either one way or the other. And then if we look at the buying pressure, you can clearly see we've structurally broken down here. Never a good sign if you see volume actually smiling at you. Oh boy, that's not a good sign. And you can also see a cute little M right there, right? So you can see the buyers, they're on pause right now. And you can kind of see it in the volume bars, right? They're just slowly heading down. So really can't justify going and buying this here. Other than, Ryan, I want to go buying altcoins and I need the local currency to buy it. Where should I've got to pick some up. Well, maybe just nibble a little bit here. But structurally, there just is no bull here. All right, hate to be the bearer of bad news. Sorry about that, guys. And whoever asked about that. Okay, so let's keep an eye. Do we have to work our way down into reload zones on OKCoin and test original breakout levels? Keep in mind, this is sort of the area where Chicago went out. So do we see a gap opening in Chicago for them? Let's keep a close eye on how Chicago acts here. And of course, next week, let's see if this runs into major resistance here. Or do we bot out and can we blast our way up into these resistance levels way up top here, which I think we have on that 4-hour chart. Yeah, so if we can resolve all this bullishly, looking for a serious tag, probably Mountain Man level there, 4,700, which would be a nice treat, sort of take the pressure off. If we have to continue working our way lower, I'd look for a serious fight here at about 36, 3,700. Okay, guys, I've been blabbing away forever. Have yourselves a great day. I hope you guys got value out of that offering today. And I also spoke to the person who'd asked me to take a look at that B&B trade. So, all right, guys, gonna leave it at that. Have yourselves an awesome rest of your day. Riza, Andrew, and I are all hitting LA hard on Wednesday. Oh my God. Jonas, we're all crashing at your place. You realize that, right? Have yourselves a great day, everybody. Play from a position of strength. Trade your setups, right? Just, wait for the setups to come in. Rock and roll. Have yourselves a great day. All the best and a big bye for now.